let's bring on board an expert voice to help us get some more insight into what all these IT companies as well as the other big companies scheduled to post their numbers might be putting up. We've got Nitin Jain, who's the head for retail capital markets at Edelweiss Financial Services, joins in. Nitin, great to have you with us. IT is, of course, the flavor of the day and is going to be dominating headlines for the next couple of days now. From HCL and from TCS rather, later in the day today, what is it that you're expecting?
First of all, thank you for having me. I think we would be very surprised if the results are anywhere close to disappointing for the street. And if you see what has happened in the last 4 or 5 months, I think IT stocks have taken a little bit of a beating because of some expectations that the numbers might be a little muted. At least vis-a-vis the expectations, we are expecting a little more positive outcome, and hence we continue to stay bullish on the large cap IT stocks in particular.
Okay, within the two though, which one do you expect to post better numbers, and which one are you more bullish on? Is it TCS or HCL Tech?
I think both are equally good stocks. It depends, in terms of, what is your existing position in terms of portfolio and all. We would stick to both. I think Infosys is one such stock which is currently a little undervalued vis-a-vis these two stocks, and it might be worth taking a little contrarian call on that stock, because I think the kind of premium that it has historically traded vis-a-vis these stocks and the discount at which it is trading, that makes for a very interesting trade. So we would be long IT largely across the spectrum, but I think there's some merit in considering Infosys seriously in your portfolio.
Take a look at the markets as well. They've taken quite a nosedive. In fact, as we speak right now, at the lowest point of the day, we've dropped close to 20 odd points. So 67.10, that's the level we've got going on the Nifty right now. That's a cut of about 1/3%, and we seem to be losing ground by and by. I mean, in the last couple of minutes, that's quite a bit of selling pressure that's built up. So 67.08 is where we are perched at as we speak. Nitin, the banking numbers are also getting kicked off. You have IndusInd Bank. Anytime now we would be seeing the numbers come out from them. Do you expect that this quarter as well, the outperformance from the private sector space would continue, and what's your bias when it comes to the private sector versus the public sector banking space?
See, from a very short-term point of view, there might be an opportunity to look at a couple of public sector banks, and from a pure trading call, over the next 1.5 months, those stocks can outperform. But structurally, if you think about it, I think we would continue to stick with the private sector banks, and amongst them some of the quality names like ICICI Bank, HDFC Bank, Axis Bank, IndusInd Bank. These are the 4 banks which we think are very, very attractive franchise, and I think over the next 3-4 years can easily compound at the rate of 15 to 20%. And don't forget, I mean, most of these banks in terms of prices might have moved a lot. But even today, when you look at absolute valuations, most of these guys are trading anywhere between 1.2 to 1.5 times book, and ROEs range anywhere between 15 to 25% depending on the bank that you're talking about. So I think banking looks a very interesting bet. Having said that, I think election is a big catalyst. If things don't work out the way the markets are expecting this election, then I think banking might also be the sector which might take the larger hit in that event, but we would use even that opportunity to accumulate these stocks.
By the way, I just want to get some trading perspective going, because yesterday's top losers continue to fall. DLF is down another 3% at 161. The sell call yesterday, and it's continued further. HDFC is followed suit, down another 2% in the session today, so not looking good. Similarly for a Kotak, which is down another 1.5% as well. So slightly wobbly the last few minutes of trade. Mitesh, DLF and HDFC, and I believe you had a sell on DLF yesterday, but broadly just a view on the Nifty as well, since it's just cracked almost 30 points in the last few minutes.
Yes, we had a sell on DLF as it broke below the range of 170 to about 181. Looking at targets of 159, possibly 155, which is the 200-day average. So I think there's still about 5-6 rupees of decline which can happen. I think HDFC also, after giving a good breakout and making it all-time highs, has immediately slipped. The last weekly breakout level was around 850, 853. So I think it will retest those levels. I'm not looking at big declines left in the markets, but yes, the pullbacks could extend a bit for the next 1-2 days.
Okay, stay on, gentlemen. So much more to speak about. Nitin, request you to stay on. Would want to talk to you about a lot of things, including Just Dial. I think we'll focus on that stock a bit on the other side of this break. Mitesh had a sell call on that. It's bounced back a bit. Well, in the money by a wide margin. We spoke to the management as well, so that's something that we'll focus on, and we'll focus on the markets as well. I think it's falling thick and fast now, 34 points down, and the CNX small cap index is down 30 points, almost 0.75% for the broader end of the spectrum as well. It's just looking slightly wobbly in the last few minutes of trade. Focus more on the markets in just a bit. It's pretty much at the same levels, around 6,700, and the mid caps have flattened as well, quite a bit in the last few minutes of trade. Focus on Just Dial as well. I mean, the markets at large, but some particular stocks as well. And Nitin, what's gone wrong with Just Dial? I mean, you heard the management clarification on the channel as well today. They've spoken about how the future would be, ad spends, etc. would be, but serious carnage the last 7 or 8 sessions on Just Dial.
Right, you are absolutely right. But this has been one hell of a story if you think about it for the last 6 months. I think the stock is at a market cap of something like 8,000 crore, and I think the profit reported for last year would be around in the region of 60 to 70 crore. So the stock, despite all the correction, is still trading at 100 odd multiple on a trailing basis. So I think these stocks will be driven a lot by news and a lot by what is happening in international markets with largely internet companies, and I think the market is just it's some kind of a fad that market is betting on, and it is a possibility that if something big happens over the next 3-4 years, this entire space might dramatically increase in terms of the revenue pool and the profit pool. But from any valuation metric, if you look logically at this point of time, the stock looks seriously overvalued, and I mean, it's only time will tell that whether the expectations that we are building with a stock like this will they pan out. So I would not read too much into the 20-25% fall in the stock price, because the stock has already rallied around 200% since it IPO'd, I think, less than a year back. So if you look at the larger context, I think this kind of volatility is very normal for this stock.
Nitin, another space that's very volatile today is the mid-cap infra pocket. The likes of an NCC, JP Power, all these names have been very volatile. But a few like an NCC or even a GVK for that matter have managed to show a turnaround in terms of stock price performance, at least over the last 3 to 4 odd months. But going ahead, are you seeing them at attractive valuation levels? Would you advise one to enter in or stay away?
See, some of the stocks that you talked about, I think they are completely binary bets right now. I think it depends a lot on in terms of how the election turns out and how the economy picks up from there on. I think if we had chatted around maybe a couple of months back, maybe 3-4 months back, where the valuations were extremely cheap, then the case to have this in a portfolio would have been much stronger. But today, I think it is quite a likelihood that if things turn around, these stocks can be 2-bagger, 3-bagger, even 4-bagger, some of them, for the next couple of years. But for some reason, if that doesn't pan out, I think there is at least they can wipe out 40-50% from their current prices. So it's a big bet that you have to take, but largely based on the election outcome. And people are making those kind of bets, and that's why some of these stocks have rallied. And some of them have got probably extended a little more than due, and hence you're seeing a little bit of correction on those counters.
Okay, Nitin, we'll let you go at that. Thanks so much for taking the time out and being with us and giving us your view and your recommendations as well. That's of course Nitin Jain, but I think the markets demand more attention.